Conventional gasoline cars that use fuel oil (BBM) gasoline aka internal combustion engine (ICE) could be threatened by the increasing competitiveness of electric cars, battery electric vehicle (BEV), especially Chinese BEV electric cars. This means that without having to wage a price war, electric cars will be able to further erode the ICE car market in Indonesia. Moreover, currently more and more Chinese electric cars, both BEV and hybrid HEV, are entering the Indonesian market, carrying various models and brands. Automotive observer Jans Pasaribu said that Chinese electric cars with increasingly competitive prices will quickly target the millennial and Gen Z age groups. Their consumer groups are potential consumers with purchasing power that is not yet strong, having purchasing power in the price range of 200 Indonesian rupiahs minus 500 million. Millennials and Gen Z are more technologically literate and are starting to look at environmentally friendly technology with lower ownership costs. So, even though the discount is small, the price of Chinese hybrid cars will be increasingly competitive when compared to local HEVs and even local ICEs coming soon, he told CNBC Indonesia, Thursday, the 6th of December 2025. This, he continued, is due to the large production scale and price-slashing strategy to capture the conventional ICE market. Chinese hybrid cars with low prices, even without incentives, can erode the conventional ICE segment, especially in the young generation of new middle-class consumers. Conventional hybrid cars, such as the Toyota Innova, are at risk of losing the market because the price of Chinese hybrids is predicted to be 30–40% cheaper with similar technology. Some are even more advanced, he explained. Now we see the price of Chinese entry-level EVs approaching 200 million Indonesian rupiahs after incentives. It is getting closer and starting to threaten low-end ICE cars (LCGC), such as the Toyota Agya, Daihatsu Ayla. Then they are also entering the 7-seater low MPV segment, considering that 83% of Indonesian consumers prefer 7-passenger cars, he explained. This condition, he said, will accelerate the development of the electric car ecosystem in Indonesia. In the midst of this condition, he continued, new challenges have emerged. Jans said, currently there is a decrease in the price of LFP, lithium iron phosphate type electric car batteries. Global LFP battery prices are falling from $149 per kilowatt-hour in 2023 to around $99 per kilowatt-hour. A significant decline is underway, he said. The decline in LFP battery prices, he explained, was triggered by several factors. Among them, said Jans, overproduction in China is a significant trigger because China dominates the world's LFP battery production. Excessive production capacity creates tight competition between manufacturers, further depressing battery prices, he said. Then there is the decline in the price of lithium, the main ingredient in LFP batteries, which has fallen more than 85% since its peak in 2022. This also contributed greatly, he said. Another trigger, he explained, was due to the increasing efficiency of battery production technology in China along with the scaling up of its economy and the rapid development of Chinese manufacturing technology innovation. In addition, market demand is shifting to LFP due to the trend of interest in the world's largest market for cheaper entry-level EVs, driving down prices. Not to mention manufacturers such as CATL, BYD and others who continue to optimize their supply chains globally, which further accelerates the decline in their production costs, said Jans. Therefore, Jans continued, if local ICE manufacturers do not adapt with pricing strategies or innovation, their market share is at risk of being eroded by the preferences of a new generation that is more rational and open-minded towards environmentally friendly lifestyle alternatives.